Hi, everybody. This is Kevin Gormley with Leading Edge Financial Planning. And today, again, we're going to talk about the pilot guides to real estate investing. So, this is going to be a little bit tongue in cheek, but also really serious at the same time. Hopefully, I can provoke a little bit of thought. We're going to talk about the word passive, what the word passive means, a few different definitions of passive, a tax definition of passive income, which is extremely important if you're getting into rental real estate. Now, the focus is on long-term rental real estate. If you have an interest in doing short-term rentals, please leave that in the description below and we can talk all about short-term rental real estate. Really, it's going to be a lot more active than passive when it comes to short-term, but happy to discuss that as well. So anyway, let's talk about the word passive. So I actually looked up the definition of the word passive. That's something we used to do back in school and whenever we did a project. Passive from Cambridge Dictionary is not acting to influence or change a situation, allowing other people to be in control. Okay, so this word passive is just like kind of just sitting back, chilling, and when somebody says, "What do you think?" You say, I don't really think about it, or I just work here. Doesn't that make you mad sometimes when people say that? I just work here. I don't control anything. So, that definition of passive, I really don't think that's a good definition when it comes to real estate investing. Passive income, I think, is a much better definition to use with rental real estate. And again, Cambridge says passive income is money that you earn without having to work for it every day. For example, money that you receive from renting out a property. So I think this is more the definition of passive when people say it's passive income, mailbox income, that you just don't have to do it every day. And so I'm going to go through a few examples of passive investing. The first is, and I'm just going to give some steps here of what you need to do for this type of investing. Number one is passive investment, where you just take money and you take it and you invest it in stocks, bonds, REITs, T-bills, etc. That's it. Take the money, you invest it. Now, one could say, well, yeah, but you still have to do your research. You still need to know what's happening with markets, all these kinds of things. I think if you diversify really broadly, if you're trying to just invest and pick one stock or just invest in one bond or something like that, I do think that takes a lot more work. But to me, the ultimate gold standard definition of passive investing is to take your dollars and put it in a CD. Take your dollars, put it in a T-bill. Take your dollars and put it in a highly diversified fund or bonds. Could you lose money? Yes, you absolutely could lose money, but you're just taking your money and you're investing it. That to me is the ultimate passive investment. So now let's talk about passive example number two, which is real estate investment, rental real estate investment with a management company. So I think this is one step up above. And so I just want to provoke some thought here. And if there's things that you say, no, don't really have to do that, that's perfectly fine. I at least want to provoke thought and get people thinking about all the things that you might have to do if you decide to do rental real estate. So number one, you again have the money, you take the money. You really do need to research the market because all real estate is local. You need to find a property, make an offer on the property, and then buy and close the property. And so you need to make the decision if you're going to use full cash or if you're going to borrow money. Again, usually if you borrow money, you have the potential to make more money using leverage, other people's money, as they say. Then you have to hire a management company. Which company are you going to choose? You have to take calls from the person or persons from the management company when issues arise. Now, maybe that's not going to happen very often. That is the hope. And if the management company is good, I think that's absolutely true. But you do have the potentially unexpected phone call that will cause you to have outflows of money. So you might have to fix stuff. And again, they're going to be asking you for the permission to fix stuff, I believe. If that's not the case, please let me know. I would hope if something's going to cost $4,000 or $5,000, they at least give you the call and say, hey, you just need to approve this. Now, if you have good tenants, probably no problems, probably all good. That will be passive income. If you have bad tenants, you're probably going to get a lot of phone calls either from the property management company. Yeah, probably from the property management company. You also need to make sure taxes are paid and you understand depreciation. So you just need to have a little bit of education there. This is the one that for me was the deal breaker, conflict with someone. So, when you have rental real estate, you're always going to have situations that come up that cause conflict. Now, if you're somebody that doesn't mind conflict, then it's not a problem. Maybe conflict with tenants, conflict with the management company. I've heard of a few cases where people are like, man, I can't stand this management company. I'm like, well, why don't you hire a new one? They're like, I don't know how to hire a new one. You might have conflict with contractors that come in and say that something needs to be fixed, or they don't fix it the right way. And then finally, someday you will probably sell that property. So you have to go through that process. So having a management company absolutely can minimize the amount of active participation, active work that you have to do. But there still is quite a bit of items that you need to control, manage, lead, however you want to put it. So there is still some non-passive work here. All right, so now passive rental real estate without management company. This is the third example of less passive. But again, you need to take the money. You get the money from work. You need to research the market. You need to buy the property and close. You can have cash. You can borrow the money. If you borrow the money, you need to go down that process. Now, because you don't have a management company, you need to advertise or interview potential tenants or clients. You need to draw up a rental real estate lease or agreement. So that's probably pretty easy to do today, and people can help you with that. But you still need to do that. You need to take calls from the tenants. I didn't say also that you need to check maybe background check as well, but you need to contract contractors, or handymen if something goes wrong, handy people, whatever the case might be. If you have good tenants, again, you're going to have less problems. If you have bad tenants, you're going to have bad problems. As a matter of fact, Charlie in the Aero Crew News wrote about some of the things that happened to him with having some tenants that said they might burn the place down because their boyfriend or girlfriend that lived there broke up with them. You might need to go in and check the air filters. This is something the person that I shadowed for a while did. He said he always went in and checked the air filters, changed the air filters, just to be able to get eyes on the property. So taxes and understanding depreciation, again, that's important. And number 11 is conflicts with someone. Maybe you'll have conflicts with the people that are renting or contractors or maybe even other people. Maybe the local government might give you some grief. And then someday you will sell. So, I thought a little bit more about this and some of the conversations that I've had with multiple pilots over the years around rental real estate. And I have to say that some pilots and or their spouses, they love all this stuff. They have no problem with it. It doesn't cause them a lot of stress. Others feel a lot more stress when it comes to these issues. So really knowing yourself, I think, is really the key here. If you understand yourself and you know that you can deal with it, great. We used to say that, hey, why don't you try it? Because you could buy a property that's $150,000. You still probably can in some parts of the country, but now it's a little bit more difficult to dabble. So again, I think it's a good idea to shadow somebody if you can. All right, so the passive income. The passive income that maybe you need to be most understanding of is this tax benefit that people talk about. So I actually took the definition of passive, and I'm going to read it here. Passive activities include trade or businesses in which you don't materially participate. Okay, that sounds good. You materially participate in an activity if you're involved in the operation on a regular, continuous, and substantial benefit. In general, rental activities, including rental real estate activities, are passive activities, even if you materially participate. However, rental real estate activities in which you materially participate aren't passive activities if you qualify for the real estate professional. Please see the YouTube video, and hopefully we can post it here, on Gina Roth and her discussion around real estate professional and some of the difficulties in that high hurdle. She actually says that if you're a pilot you're probably not going to be able to be a real estate professional. Even if you take all your waking the rest of your waking hours when you're not flying, the IRS really goes after that. So also, there's a limited exception for the passive activity rules for rental real estate activity if you make less than $150,000, which again, most of our pilots, that's a non-starter. So, what's this passive income for IRS? What does it mean? Well, if you think of two train tracks that are directly parallel, okay, they're right next to each other. The one train track is the income, the ordinary income you get from flying, or your spouse gets from working whatever W-2 or 1099 job that they work. Okay, that's one of the tracks. Passive income is on a whole different track, which wouldn't be so bad, except when you spend a lot on rental real estate and you lose money on the rental real estate activity, it's on a different track from the rest of your income. You cannot deduct the income against your ordinary income, your flying income, your working income. So although rental real estate has a lot of tax benefits, one of them is not that you can offset your workaday ordinary income. And that's kind of a shock for people. So one of the curses that happens when you do your tax return and you see the statement of a carry forward loss, a passive carry forward loss. You're like, what's a passive carry forward loss? Anything that you have to carry forward that has the word loss means that you weren't able to take it this year. You might be able to take it in the future. And I won't get into why and how you can take those in the future. But that's one of the things that I know has, shocked some people. I'll use the word shocked. They've gotten into rental real estate and they're like, hey, I spent all this money. How come my income, it didn't help my income at all? Well, it doesn't help your income because you're on a different track. Okay. And so you could have massive losses in your rental real estate business. Again, depreciation is a shield that might make them look worse, but you cannot offset. So understanding that passive for the IRS is extremely important. So the final thought experiment here is the opportunity cost. Okay. So the opportunity cost with investment is a well-known concept. If one invests in one investment, you cannot invest in another investment. But I also think opportunity cost for pilots specifically, because pilots are away so much to come back and spend time with the family or friends, there's really an opportunity cost of your time, and it's extremely important. Time is even more limiting than money because we don't know how much time we have. We might be able to earn more money. But this is why it's important to understand this passive issue here with how much time you're going to spend with a rental real estate property and how much money you're going to make. Again, I think we think the number one reason to do rental real estate is to be profitable and make money if that's what you want to do. But there's also a amount of time, an investment of time that you need to put in. So we've heard this from a number of pilots. They say, I'll just pick up an extra trip per month, and maybe that's possible to do that instead of rental real estate. But that is an opportunity cost, because when you pick up more time flying, you can't spend more time at home or doing the things that maybe you love to do. The other things you love to do other than flying, that is. But we've heard some pilots say that they can make about $20,000, maybe $30,000 in rental real estate, cash on cash, if you will. How many extra trips would you have to pick up to be able to make that amount of money and not have to deal with these other things? This is just something to consider. Again, I'm trying to provoke thought. I'm not trying to say you should do one versus the other. The reason why rental real estate is so good is that you can have a inflow of cash, and you might be able to get a big capital gain on it, and it might be much bigger than just $20,000 a year over the life of that property. And it's also a diversifier. If something happens and you lose your medical and you can't fly, having rental real estate absolutely is something that can continue to go on. So again, I think these are all valid reasons for doing rental real estate. So I think the question that I would ask, that we've all been waiting for the answer on during this video, is rental real estate really passive? number one. And number two, is it really worth it? And unfortunately, it will be yes for some and no for others. Thanks so much for watching, everyone. Love to get your feedback on if this video has been helpful. If it's not helpful, please send me an email and tell me. Please don't eviscerate me in the comment section. But I very much appreciate your time and your attention. Thank you.
Leading Edge Financial Planning, LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.